Hey everybody, and welcome to your midweek meditation or end of week meditation. Apologies for the delay. I have had a busy travel schedule, but I'm just getting back home and winter is coming. But today I wanted to focus on mixed signals in markets. And if you've been analyzing the charts, you've probably seen a lot of mixed signals in markets the last 2 weeks and have probably also noticed that the analysis has been a bit more challenging. And I was thinking about this because as I scrolled through X this morning, there were so many hyper bullish posts and then these hyper bearish posts and not much in between. And some of the hyper bullish posts were, going off chart patterns that had already hit the price target and saying, oh, it has to run more. And then the bearish ones were looking at one instance 3 years ago of gap up opens in the NASDAQ and a subsequent crash. And you just can't base a bearish narrative off of that. So the thing I wanted to focus on is just simplifying things in these times where we are getting a mix of bullish and bearish signals in the charts. And depending on the sector or the industry you look at, you will notice that across charts. And I think that was exemplified this week. I mean, even via FOMC, we got the rate cuts we were looking for, but Jerome Powell had a hawkish tone. So that pushed markets in both directions. The US government shutdown is persisting, which is keeping liquidity out of markets. Even on Wednesday with Microsoft, Meta, and Alphabet all reporting earnings beats, yet Google runs up and the other two get beaten down. And that's a separate conversation on expectations and how they were lower for Google, so it had more room to run versus that being very high for the other two assets. But during a time like this, it's okay to slow down and just wait for things to settle out. Or if you are trading, I like to simplify things to simple if-then statements. So if I have my range I'm looking at, or I'm in an asset, if the underside support drops or fails, then I'm getting out of the asset. If it breaks to the upside, then I'm adding to my long position. Just really try to simplify things, and we will get more clarity in markets again. The trading environment will become easier, but I suspect the challenges are going to persist just a little bit longer until we can get some clear direction. The US government shutdown ending would definitely help things. But markets do sometimes give mixed signals. We're at key inflection points for things like crypto with the end of the 4-year cycle. So all of these things are coming together right now to lead to that indecision. I default to looking at metrics with more historical precedent and confluence across a lot of examples. And I would say a lot of those are still pointing to upside over the year ahead in 2026, despite there most likely being some bumps in the road. So I anticipate a January or early Q1 pullback, probably another more meaningful pullback next year. A lot of chop to take advantage of if you are trading, but also volatility. So be careful. It's an interesting time in markets. It's a challenging time in markets, and there is opportunity out there, but you have to be careful. So that was a bit of a ramble. I hope it's helpful. I look forward to seeing you guys for the weekly wrap up, which I will record in just a few hours. Bye for now.
This isn't financial advice. Past results are not indicative of future performance. Do your own research.